Hello guys, welcome to the Nailing FX and Crypto session. Hopefully obvious what we're going to be looking at. We'll be looking at Forex and cryptos. We mainly tend to look at the Forex markets. That tends to be where we have these scans to be looking at those. But we will look at some cryptos as well if you guys want me to. So you let me know in the chat box as always what it is that you want me to look at. What we'll do normally is we go through trades that we've put on before, how we might have managed them, how they went and things like that. And we'll also look at new opportunities and put any trades on that we can. Now, in these kind of sessions, in fact, what we'll do first, if we cover the disclaimers first, and then I'll just explain how these kind of sessions work. So the disclaimers are up there in the top left-hand corner. So give those a read. Important for legal reasons for you guys to read the disclaimers. So they'll stay on the board or stay on the screen even as we go through other things. So there they are, top left-hand corner. Whilst they're still there, let me just introduce myself for those that don't know. My name is Becky, that's me there. My email address is becky@traddictiv.com. There's also support@traddictiv.com. You can use both of those to get hold of us, no problem. Now, what we'll do is we'll go through market environment, trade reviews, trade management, and trade execution for new opportunities. Now, for these kind of sessions, we are actually streaming in multiple places at once. So normally after we put on at least one trade, we will cut the stream to the free ways of getting hold of us, which is YouTube and Facebook and LinkedIn and things like that, where you'll be watching for free. We'll cut the stream off to those after we've put on at least one trade, and then continue in our closed coaching community, which is what people pay for, because they have access to more of our time in that closed environment. So you guys that are watching for free, you will get at least one trade if the opportunities are there. If we can't find any opportunities, we go straight through to the end. So depending on how quickly we find one will depend on when we cut this stream. So hopefully that makes sense. I'll just make sure that I've got as many chat boxes open as possible. For those of you that are joining me, you let me know again what you want to look at, if anything in particular. So what we're going to do first is I'm just going to take you to a quick link here, which is tradewithufos.com/Becky. You can get yourself a free Trade with UFOs membership up here. And then what you can do once you've done that is you can ask a question here. So as much as you can, email me, and I'm happy to answer emails and help in it any way that I can. If you post questions here, I can answer it here, which means that we have questions and answers in a public space that other people can learn from. So ideally, this is where you'd come to ask questions. So let's have a look at what we put on last time. I've got a list over here just to remind me of the trades that we put on last time, just to see what happened. So the trades that we put on last week, so 18th of August was our last session. We put on this trade here with the Euro Canadian, and we just missed it. If I spread this out here, we just missed it here. In fact, perhaps this came very close just after we put the trade on, but we didn't get into the trade, unfortunately. So we missed out on that massive long move to the upside. We would have missed out on that. By this point now, we would be cancelling the trade. Main reason for that is because the climate is no longer in our favour. We would have put this trade on the 18th of August, which was at this point, because we had a nice thick blue dot, probability upwards, and we had other things lining up. By the time, obviously, the week has gone by, we no longer have the climate on our side, so we would be cancelling that trade. And like I said, very unfortunate, we missed it by a little bit. Would have been a good trade if we'd have got in, but we would have missed entry, and now we would be cancelling this trade. So I'm just going to take that off. In fact, I'll leave it there for now. Then we had a dollar-yen trade. So the US dollar, Japanese yen, and that was on. We had a 1 hour chart on the left hand side and an 8-minute chart on the right hand side. So what I'll do here, if we use this left hand one here to help us with this, so we can see what happened. So we would have hit both of our targets in this situation. So we had our entry on the 18th of August. We triggered on the 18th of August on the same hour that we would have put the trade on. Price went off, hit our safety target. Great, that would have made it a break-even trade. If price had come against us at that point, we would have broken even. So we've taken half of our profit then. Price came back in, went back up, hit our final target. So hit our slightly further target away, and we were out of the trade for a profit. It then came against us and would have stopped us out, but doesn't matter. We were already out of the trade, having hit our targets, and it basically turned exactly where we thought it might, which is where our final target was. So we would have had a winning trade in this instance, and from placing the trade to it closing and hitting our final target would have been from 2 o'clock on the 18th of August to early hours of the 19th of August. So you would have had to hold this trade overnight in order to hit the final target. If you'd have closed it just before the market closed, let's say the US market, so let's say around about this time, then you would have perhaps had a little bit of profit and then taken a stop out here or taken your target off there. And then you still would have been in a slight profit. If you'd have left it overnight, you would have hit your second profit target by the morning. So that was dollar Japanese yen that we put on last time. That was put on in our closed coaching session, and that there, like I said, would have been a full profit. We then had a Swiss franc Japanese yen, and we had 4 hour on that one and 21 minute on this one. Swiss franc Japanese yen. Now I think made a note there, we used Oanda data for this, so let me just make sure we're looking at Oanda data. There we go. And Swiss franc Japanese yen Oanda data. So what happened here, this was a long again. With this one it looks like it was just a straight stop out, but let's just expand this and double check. Yep, okay, so we placed this on the 18th of August round about this point here. Price came in, went straight through the area and would have been a stop out. I know eventually price went in our favour, but it had to go quite a bit against us first before that happened. So rather have got out at this point, and then we could have perhaps got in at a later point and taken that move to the top there. But overall, this one would have been a flat out loss. So far we've got a flat out profit and we've got a flat out loss. Profit on the dollar yen on smaller time frames, a loss on the Swiss franc Japanese yen on slightly sort of middly time frames. And then the last one we looked at was the pound Aussie. Again, these were trades that were taken, most of these were taken inside the closed coaching session. And this was an hour and an 8 minutes. Let's see what happened there. Okay, so let me just spread this out, see whether or not we would have triggered here. Where was the low of that? Low of that 7-1. We would have only just, that's lucky. So if we see here, our entry was 1.8972. That was the entry. The low of this candle that I'm highlighting, which is where we would have been triggered, the low was 1.89719. So literally by 0.0 of a pip, you may have in real life, depending on the spread at the time, you may have missed that by percentages of a pip, or you may have been very lucky and just about got in. So I'd say 50-50 whether or not you would have actually been executed on that trade based on the fact that it was 0.1 of a pip the price actually came into this area. If it moved very quickly, we might not have been filled. If it didn't move very quickly, then we may have been filled. If we were filled on this trade, it would have been a happy trade to be a part of, because we would have hit, if I scroll this here, we had a trailing stop for our second target. We would have hit our first target by this point, so it came in, again, perhaps it triggered by that 0.1 of a pip there. Came straight back out again and hit our first target, which is great. In fact, yeah, it would have been this later on. Yeah, so we would have hit our first target there, so safety target is hit. Price is then continuing upwards, and we would have done a trailing stop for our second target. So what that means is that as new UFOs were developed, so let's say, for example, let's say a new UFO developed here. And it may not have, we could go back and check, but let's just assume. Let's say a new UFO developed there. What we do is take our stop loss from here and put it here, so that if price came against us, we'd be stopped out. Let's say price then created a new UFO up. Can't actually see anywhere where it might have made one, perhaps here. Can't draw my thing for some reason, so we'll just do the box. So let's say a new UFO had been formed there. Again, we would have pulled our stop loss up to here and stopped out at this point. So I would imagine there would have been just looking at the shape there, I would have imagined might have been a UFO around about here, in which case our stop might have been around about 1.9055, call it 1.9055, and we would have been stopped out there for a profit. Because let's say this was where my stop loss was. Let's say it was around about that point. Well, price went up, hit our safety target, continued. We then put a stop loss at this point. Price then came back against us and stopped us out at this point, but stopped us out at a profit. Now, what we also might have done in this situation, and we've talked about this in sharpening sessions, when and where we would sort of make sure that we get out of our trades, we may have got out of the trade at this point. You see here, this is the first time that the climate was no longer in our favour. So that was this candle here, which means again you may have, depending on when you looked at it in that day or amongst that hour, you might have got out around about the 1.9080 area, or maybe 9070. Maybe that's where you got out. So if you'd closed out based on a climate change, or you moved your stop loss and got stopped out at a trailing stop, either way you would have taken relatively decent profit out of this trade, and it would have been an overall profitable trade. If you just set and forget it and you completely didn't look at it at all, and you had no idea that that was happening, and you didn't get out or trail your stop, well then what would have happened is you would have had a safety target there that would have hit, then you would have been stopped out here, overall break-even trade. So the worst that should have happened in this trade is a break-even trade. The best that could have happened is that you took profit somewhere along the way here as well, and you made an overall profit. It may have been that you didn't get triggered because it moved very quickly, and it was only 0.1 of a pip that actually came into that area before it shot off again. So depending on how quickly you were able to be filled would have depended on whether or not you were filled. If you weren't filled, then you would cancel it by now anyway. Climate has definitely changed since then. We're no longer in an upwards climate, so we would cancel it. Or like I said, if you were triggered, worst that would have happened would have been a break even. Best that would have happened would have been a profitable trade. So those are all the trades we put on last time, and a sort of explanation of them, how they would have gone. Overall, let's say this one was a break even. It shouldn't have been if you tracked it properly, but let's say it was a break even. So we had one losing trade, one winning trade, a break even trade, and a trade that we missed. Overall, it would have worked out at slightly profitable over the course of those 4 trades, which is what we're happy with, what we want to see. Okay, so before we go and look at something new, let's go to FX Street's economic calendar and figure out if there's anything coming up that we need to be aware of. So I'm going to filter by the United States, the UK, Japan, Switzerland, New Zealand, European Union, Canada and Australia. The reason I'm not clicking the others is because for a currency perspective, the euro is one currency that's a lot of those different countries. So you could tick them all and you would be much more specific about those things, but hopefully something that happens in Italy will not affect the entire euro, but we want to know if there are things happening with the entire European Union that could impact the euro. Not to say, by the way, that individual countries can't affect it, just obviously less so than perhaps EU policy or things like that. We're also going to go for high impact, and we're going to click apply filter. Also going to make sure that we're looking at from this week, so from today till, let's say, to the end of August. So that way we can have a look here and we can say what's coming up that we should perhaps avoid. So in this particular instance, we see that today we had, these have already come out, so we can kind of avoid today now anyway, because these have already come out. Tomorrow we have US dollar news coming out. This is British summertime that we're looking at here. So US dollar news coming out in the afternoon in Britain, which would be in the morning in the US, and obviously in the afternoon, evening in other parts of the world. So news coming out tomorrow afternoon British time that could affect us on the US dollar. We'd have early hours of the morning UK time again, where we would have Australian news. The dollar again, round about the afternoon on Friday. Over the weekend, markets are closed anyway, so we ignore that. And then the euro might see some impact in the morning next Tuesday, and the Canadian dollar might see some impact in the afternoon next Tuesday. So for trades that are going to last for the next few days, what's really important here is let's just be aware that for tomorrow and Friday, the US are having a few things coming out, scheduled news reports, that could impact volatility in these markets. So there are different ways to look at that. You can either say, avoid trading the US dollar then, don't trade the US dollar at all, because we don't want to be on the wrong side of the news. Okay, you could do that. That's a more conservative way of dealing with that. You could ignore this entirely and trade whatever you want, however you want, and ignore the fact that the news is coming out. That's a very not conservative way of doing it, more risky way of doing it. I prefer normally something in between, which may be, let's not if we're going to place 2 or 3 trades, let's make sure that only one of them is a dollar trade. So let's not make all of our trades dollar trades. And you could also perhaps just reduce your risk on those trades. So instead of risking $100, you risk 50. Instead of risking 10 bucks, you risk 5. Whatever it is, you could reduce your risk so you're not as exposed to a currency that might see some volatility. So let's see what we have available to us, and then we'll go from there. So we're using the TradeStation scans to help us with this. And I show these all the time. So for those of you that follow me a lot, sorry for keep explaining to you what these scans are. But for those of you that are new, it's going to be helpful to know what these scans are. We're using TradeStation. And by the way, if you have a TradeStation account and you want these scans, just email us. We're happy to send them to you. What the scans are doing is showing us, first of all, with these yellow boxes, where we have opportunities that are near. Meaning, where do we have opportunities that are close to current price? We want to know that. Great. Then you might see some of them say sensible and some of them say hopeful. If we're trading, we don't want to be hopeful, we want to be sensible. So we will take out the ones that say hopeful. We just won't even look at those. We'll take those out. So that's leaving us with less. The scans are already showing us where the near ones are. Those are the ones we want to look at. And we don't want to look at near hopeful, so we'll take those out. Then what we want to look at is this column here, which shows us red boxes, blue boxes, and grey boxes. Red boxes tell us we have probability downwards. Blue boxes tell us we have probability upwards. Grey boxes tell us we don't have enough probability either way. So we want to take those ones out, take the grey ones out, because we don't want to be looking at things that don't have at least a probability one way or another. So we'll take those out as well. So if we take out the ones that say hopeful, the ones that have grey boxes, and then we're looking at what's left, the ones that have yellow boxes that are left, we're left with a handful of opportunities, which is better than having 20 opportunities to go and look at and go and do a bunch of analysis before we then figure out probably not a good idea. So if we take all of these out, see what we're left with is, on a 60-minute climate, dollar Canadian and euro dollar, those two. On a 240-minute climate, we have the dollar Canadian and the euro dollar. We also have the Australian dollar, New Zealand dollar. On a daily climate, we have the dollar Swiss and we have the euro New Zealand. And that's it. That's all we have to be looking at, as opposed to looking through each of these currency pairs on each of these time frames before we figure out, hey, maybe we shouldn't be trading those things. So what I'll do, I always try and start with the higher time frames, because Forex, in my personal opinion, is better to do in a swing trading capacity. Not to say you can't do it in other ways. Like I said, for me, it's my personal preference. So we'll try and look at the higher time frames. So we'll look at the dailies, which means we have the dollar Swiss and the euro New Zealand to look at. Since we just said the US dollar might see some volatility, let's start with the euro New Zealand, see if we get some traction there. So what we're going to do is come back to TradingView. We're going to look at euro New Zealand, and we're going to make it a day. So on the right hand side, it's going to be a 55-minute chart. If you can't get a 55-minute, 60-minute would be fine. And we're going to look at, there we go. There we are. And we're going to look at the opportunities that we have here, if they exist. So just looking quickly, we do not have any opportunities here, which is a shame. Let me explain to you why. So we have a thick red dot that tells us probability is to the downside. Now the scan already told us that, right? That we were looking at something that already at least had some probabilities with it. But that doesn't mean it has everything lining up that we want. That's not yet built into these scans. With our new platform, by the way, that's going to be a lot easier to do, to try and find things that do line up better, which is going to be exciting. That's with our platform top. For the time being, looking at these things, we don't have that just yet. What we do have, the scans are pointing us down the road of looking at things that make more sense to look at. Not to say these are definite opportunities. So in this case, we have a thick red dot, probability down. We do have red UFOs. Those show us where sell orders are. But our EMA value, which is 1.6934, which is around about here, is in the middle of nowhere. What we want, to summarise for those of you that know, and to explain for those of you that don't, to place a trade, if we have probability downwards, what we want is the EMA from the bigger time frame to coincide with the UFOs on the smaller time frame. That's what we want. We want sellers and sellers and sellers. We want all of the sellers together ideally, because that's going to have more probability of pushing price down. In this case, we have selling probability here and selling probability here, but they're not together. If they're not together, then there's not enough probability for us to want to take this trade. That's based on our methodology. So we will move on from this and find a different one. The other one on the scan, I believe, was the dollar Swiss. So we'll check the dollar Swiss out. Now, I know we said the dollar might be seeing some volatility, so be aware of that. Perhaps if you place these trades, reduce your risk or don't take them at all. But let's see what we have here. Thank you, just loading. Okay, unfortunately, we don't have a probability here either. Similar reason, same reason. Yes, we have a thick red dot, probability down. Yes, we have a UFO close by, but the EMA is 0.9147, which is just here. Very close to current price, but it's not at the same price as the UFO. So we don't take it. We need that EMA number and the UFOs on the smaller time frame to coincide with each other, and they're not. So we move on. And it's a very quick way of figuring that out. That's why we use technology to say, does this add up with this? No, great, change the time frame. There's no need to be wasting time placing trades on things where we don't have probability. So what we'll do, we'll come to a 240-minute climate and we'll start with the Aussie New Zealand and we'll see what we do here. So 4 hours on the left, which means 21 minutes on the right, and it was Euro New Zealand. Was it? Double check that. Aussie New Zealand. Glad I double checked it. Aussie New Zealand on the left, Aussie New Zealand on the right. Okay, so again, no trade, and the reason for that, we have a thick red dot, probability downwards. We have our EMA value at 1.0438, which is just above us here, and there's no red UFOs. If anything, there's a green UFO, which is the opposite of what we want. So no trade, no problem. We'll come back to the scanners and we'll have a look for the dollar Canadian and then the euro dollar. See what we have there. Dollar Canadian. Dollar Canadian. Okay, we just about have a trade. So it looks like it's very close. So I will go through this quickly. What I'm doing right now is I'm just drawing around the area. I've customized my fibs, so sorry for you guys that might use these as they're intended. I don't, so don't judge me. That's just just what we're doing here. Pressing the wrong button. 1.2635 plus 5 is 40 plus 2 is 42. Okay, I'm just doing this quickly so we can get the trade on, and then I'll explain to you why we're taking this trade. Okay, so what we want is this will be our final target down here, which is 1.2553, round it up to 4 plus 2. Again, I'll explain this all in a second once we've got the trade on. And then we'll cut the live streams to the free places, continue in the closed coaching community, and we'll look for some more opportunities if we can find them. So what I'm doing here very quickly is just figuring out what my safety target will be so I can then come and place this trade. It's 1.2612. I'm risking $50 on the trade, so overall it would be an overall risk of $100, $50 on one arm or one leg and $50 on the other limb, whether arm or leg, whatever you want to call it, $50 on each. So overall the distance between here and here that I'm risking will be $100. You guys will have different numbers that you use, and that's fine. This is just an example. Just gonna change these real quick because I've got the colors mixed up the wrong way. So 1.2627. Let me just put the second target in, and then I will explain why we put this trade on, why it's something that is worth putting our money on, or in this case it's a demo money of course, but why it's even worth placing a trade on this as opposed to the other ones. Okay, so now that's gone in, which means we should capture it if it does come up, and I'm just going to put here placed YouTube. I know we're in other places as well. It is the 25th August 2021. Great. Okay, so let me explain. Let's get rid of this for now as well. Let me explain. So When we trade, the first thing we want to know is, do we have probabilities up or do we have probabilities down? That tells us whether or not we're going to buy or sell. Our auto climate here is giving us a thick red dot. This is a piece of technology that we use. It's a free piece of technology, by the way. On most platforms you can use it on, it's free. This is telling us we have probability downwards because it's a thick red dot. That's what that means. Thick red dot, probability down, means we should look to sell. That doesn't mean we just press sell at whatever the price is now, because it's unlikely that whatever the price is now is the best price to sell. So how do we know where's the best price to sell? How do we know where's a good price to sell, where we can keep ourselves protected against the risk, where we can take the most reward out of the trade, and where we have actual more probabilities that it works in our favour? This is where we use our UFOs. So this UFO here, this red UFO, is showing us where sellers are. And it tells us the prices, 1.26277 to 1.26341. Between those two prices is where we have sellers. So in the context of a downwards climate, probability is down. We want to sell with other sellers. It's more likely to push price down. But there's one step more to that, which is our EMA. The EMA at this point is 1.26266. Now I know it doesn't quite line up, and I'm going to explain in a minute why. That number, 26.266, literally just by a fraction of a pip beneath our UFO. Now, as price comes up, because it's a moving average, the moving average will go up and it will fall within our UFO. It's only got to move up by a fraction of a pip and then it's within our UFO, which is why I'm happy to place this trade. Only because it's almost impossible that if price were to come up to that point very soon, that the numbers would not align. Because like I said, it's only got to move a fraction of a pip for that to happen. So that, with the EMA being then inside of that UFO, we have sellers from the climate, sellers from the UFO, and then sellers coming in at the EMA as well. Because people buy and sell at the EMA line. If price is below the EMA, exponential moving average, and then hits the EMA, people sell it. If price is above the EMA and then comes and hits the EMA, people buy it. That's it. It's a very simple way of doing things. Lots of people do it, not just individual traders, but fund managers as well. So if we have sellers coming in from the EMA and sellers coming in at the UFO, in the context of a climate that's downwards, we have sellers, sellers, and sellers all around about the same place at the same time, which gives us greater probability that it works. Means we can be tight with our risk because we use the numbers the UFO gives us to tell us where we could be wrong and therefore where we put our stop loss. And it gives us more out of the markets as well, because we're getting in a sell position at a slightly lower price, or sorry, slightly higher price, giving us more room to the downside. So looking at this here, the numbers that the UFO gave us was 1.26277. I just rounded that down to 1.2627. That's the entry. Rounded it to the closest pip downwards because it's a sell order. The buy order is our stop loss. So our stop loss, I'm using this number, which is 1.26341. I've rounded it up to its closest pip, which is 1.2635. I round it up because it's a buy order. 1.2635. I then add 5 pips of wiggle room, which takes me to 1.2640. I then add a couple of pips for the spread, which takes us to 1.2642. That's why that's my stop loss. My first target is always 1 to 1 away. My safety target is always 1 to 1 away. So the distance from here to here is the same distance from here to here. I use the order panel to help me figure that out, and figured out that my safety target would be 1.2612. And then my final target, if I spread this out over here and perhaps make that easier to look at, my final target is based off of this green UFO. And again, the numbers are on the side there. Why? Because if you have sellers in a downwards climate, sellers in the sell UFO, and sellers from the EMA, what's the only thing that can stop a lot of sellers? A lot of buyers. Now, new orders could come into the markets and change things, but from what we see on the price chart at the moment, price could go all the way down here before it hits a big stack of buyers, which could push it back up again. So my target is just before that. So the number was 1.25531. I rounded it up to the closest pip, which is 1.2554, and then added a couple of pips, which is 1.2556. That's my final target. because it's just before we hit a big stack of buyers, which in theory the only thing that can stop lots of selling, unless new orders come into the market, but we don't know that yet. So based on what we see now, we place this trade and we put our target down there. We've got a safety target close to us, so that if price does this and goes somewhat in our favor and then against us, well, we make 50 bucks, we lose 50 bucks, we're overall break even. If it really goes in our favor and hits our safety target and then continues down, then we make 50 bucks and then we make whatever that is, 200-300 bucks. Put those two together, that's your profit. If price goes straight against us and price just goes like that, straight through, hits our stop out, then we lose $100. So 2 of the 3 outcomes are not losers. That's why we do that. That's why we have our safety target. So that if price goes a little bit in our favor and then against us, worst that happens is that we break even. If it just goes dead against us, we lose what we were willing to lose anyway by placing the trade in the first place. And if it goes in our favor fully, we take a little bit of profit, then we take a bigger bit of profit. Overall, still profitable in the end of the trade. So that is the first trade that we've placed today. It's around about halfway during the session, so it's a perfect time to cut the stream to the free places and continue within the closed coaching community. Just check in the chat box as well, see if there's any questions. Doesn't look like there is, or there are. If you do have any questions, guys, by all means, please email me. That's becky@traddictiv.com, or you can email support@traddictiv.com, or you can go to tradewithufos.com/Becky. Get yourself a free Trade with UFOs membership at the top, and then you can come down here, ask a question in a public setting so that I can answer it there, and then it helps everybody else to learn from questions that other people are asking. So please do that if you feel comfortable to. So I'm going to cut the stream on the live places. I'm going to continue in the closed coaching community. For those of you waiting for me there, bear with me on this because as I go through and cut it, I need to do it one by one. So it takes me a minute or so. So for those of you watching live on the streams, thank you for joining me today. I'll be back next time. I'm not sure when that is, next week or the week after. I also do stock sessions and sharpening sessions as well. So by all means, join me on those, as well as my colleagues on other sessions that they do in futures and options and psychology. I'll see you next time. You know how to get a hold of me if you need to. Happy trading. Have a good rest of your week.